Stocks, bonds, or gold? Between the three, there's got to be something to buy. Here to tell us which or which ones is Charles Nenner. He's the founder and president of Charles Nenner Research Center. Charles, it's just a crazy world out there. We've got bond seemingly never stopping going higher. We got the market suddenly rolling over. Gold, who knows what's going on there. Why don't you tell us what's happening with the S&P 500 in your eyes?
The S&P does exactly what it has to do. We went out above 1,400, our long-term positions. I don't even know if we're going to put them back on. Then we expected to bounce to 30.49, which ended this week. And now we expect it to go down again into a cycle low next week, after which you could see a bounce again. But I have to explain two things. According to my system, the S&P profits are going to be up 6%. And the two situations with stocks and profits, there's a linear relationship. That means is if profits go up 6%, the market will go 6%. There's an exponential relationship, which means if the bonds go down, stocks go up exponentially. Now, I don't think we have that much left on lower rates, so we should look only at the linear expectations, which means is that for a couple of years, I don't think we have more band trading of 5% or more. So people are looking for these major moves are going to be disappointed. So you have to be very good in timing. And like I said, we're short again, and next week should be a cycle low, and we expect a bounce again.
So where do you expect the bounce from? Is there a target on that where we get long next week? Because as I said, we've got to be pretty careful with our timing. What are you looking at in terms of either the day or price number?
We have to be very careful. We have two targets, around 12.18. If that breaks as low as 12.35.
You go 12.35.
On the S&P.
No, that'll scare a few people.
But we don't own any stocks. We don't own any stocks. It's too dangerous.
I guess so, with 12.35 looming next week. Now, what about bonds? Yields have had no place to go but higher for 30-odd years. It's been a horrible trade. You got the Fed out there vowing to keep bonds rates low for the foreseeable future. Is there a trade here, or just kind of watch the madness and the 1.5% yield on the 10-year?
Well, there definitely is a trade, just the other way around. We took profit on all our long positions. We have no long positions because our cycle topped a few weeks ago, and then we went long the TBT. Now the TBT is going up when bonds are going down. So we are counting on, and this is a long-term position that we keep for a while. This is not something of a trade. So we expect bonds to have topped. And like I said, another program. First, people lost their shirt on the stock market. Then on the gold market, that came down from 1,900 something. And I'm afraid that now they're going to lose a lot of money in their bond positions.
Which is just brutal because they're chasing absolutely rock bottom yields. And you're saying that they're going to lose principal. I mean, they're just going to get crushed if you're diving into bonds right here, if you're right.
Well, let me tell you something. You can always make an idea that stocks can continue a bull market if profits are good. You can maybe make a story about gold, but everybody who knows anything about the market knows that these yields are not going to stay over here. That's an impossible situation for the next couple of years. It's not that in our lifetime yields will not go up anymore. So if you buy the TBT, that makes a profit when it goes up, and you just keep it as a core position, you're definitely going to make money.
All right, well, I like definitely making money. Now, you mentioned making a story out of gold. Let's make a story out of gold. It's just under $1,600 or an ounce right now. Got a lot of folks piling in. It seems like everyone wants to buy the dip on gold. Is that a good idea?
No, because if we would see my cycle chart, the cycle are still down into end of August, September. And when we sold at 1,900, we came up with a downside target of 1,375. It's not totally confirmed. There could be something in between, but the risk is still down, even as low as 1,375. But that's still part of the bull market, and I think it will go much higher later in the year.
And what does much higher look like? You think those 1,900 levels are going to get taken out? Because you did make that call in March, and it was a good call to get out. Now what's happening here?
Yeah, we have still a target of 2,500.
Okay, so we can buy along the way, but it's going to be a bumpy road. 1,375 is where you start loading up on gold?
Yeah, or around the cycle low, whatever comes first.
All right, well, whichever comes first. I know next week is coming first, so maybe get ready to buy the S&P lower, much lower. The bonds is about to reverse, and you got a little opportunity in gold, but hold on for the medium term. He's Charles Nenner with a lot of opportunities on the horizon. Thanks so much for joining us, Charles. Hey, why don't you let us know what you think? Drop me a tweet or hang out at our Facebook page.